trend for gold prices has been flat for some time now, but our next expert, as part of our Outlook 2020 series, thinks that prices have yet to climb higher. Joining me today, Gary Wagner, editor of thegoldforecast.com. Gary, always good to see you. Happy to have you as part of our Outlook.
Thank you so much. It's a pleasure to be here and to celebrate the end of this year and the beginning of next, which I think is going to be extremely exciting.
Beginning of a new decade, Gary. I can't believe it. So, let's start with gold price levels here. I'm not going to ask you to look too far out yet, but on a medium-term trend here, how are you liking the technicals for the metal?
Well, I have to say what I'm about to say with an extreme caveat, and that is the market has been headline-driven. And as such, it kind of clips the wings of a market technician such as myself. But that being said, when I'm looking towards next year in a medium or long-term view, I have to acknowledge what has transpired since the middle of 2011. We hit 1,900 an ounce. We had a multi-year correction that ended at the end of 2015, the beginning of 2016. And at that point, we were in a rally. We took a small little decline to about 1270. And then from 1270, we made a move to 1565. So we broke the glass ceiling of $1,370 for the first time since the market began to decline. And so for that reason, this is an extremely, extremely good year for gold bulls and the price of gold itself. And that being said, I believe that right now we have been forming a base roughly at around 1450. Of course, that came after. That was a correction that was in play after the market hit 1565. And based on that, and based on the fact that we have seen about a month of a consolidation right at this level, and now we're kind of moving back up, I feel very good that we are going to begin another rally mode, and that should be something that we witness throughout the end of this year and the first couple of months of next year.
So a bull run within a bull run.
Correct.
Okay, so Gary, let me phrase it to you this way. If I had to ask you to fill in the blank here, right, for this sentence, so you wouldn't be surprised to see gold hit blank in 2020.
My numbers are showing me that all things being equal on a technical basis, again with that caveat, because anything can happen when Trump tweets, but I'm looking for 1650 to about 1700 or 1690 as the next conclusion of a rally that has really begun over the last couple of weeks.
But what about the gold ratio in regards to equities? So if equities keep just charging higher here, would that affect the gold price?
Well, it's an interesting scenario because most of the time there is an opposite or negative correlation between equities moving higher and gold tends to move lower. One's risk on, safe haven. The other one, they tend to work against each other with one exception. And that exception is when the Federal Reserve steps in and either cuts interest rates or has a accommodative monetary policy, because that particular instance, we will see as a net result of that, both equities and gold running higher based upon Fed action. And that's kind of what we have seen recently.
So, if you're expecting gold prices to go to 1700, which isn't that far from here, really, do you expect 2020 to be really a volatile year?
It certainly could. I mean, things are going to hinge, of course, on how Trump reacts, whether he rolls out tariffs or not, and we'll know that by the time this airs. But that's really a big wild card in the market. And so I really believe that the series of tweets that Trump sends out and how we're going with this protracted trade war is going to be the crux of what we see gold do next year. And if they delay or there's any non-resolution till after the election, which is what he stated a little while ago, we could see gold really, really take off.
Well, I was going to say, if you had to choose the wild cards for next year, we have US-China, a trade war here that, every day seems to be changing the scenario, and a presidential election.
Absolutely. And the fact that Trump came out and said that he really believes that it would be best to sign the phase one component after the elections tells me that he really sees this as a benefit to him and getting reelected, because it would enable him to come out and say he's the only candidate that had the guts to take the Chinese on, which is absolutely true, and that he's the only one that can make a deal with China. Now, whether or not the American public takes that verbatim and goes with that, it's something that will definitely put points in his camp, so to speak, and that, I believe, could weigh his decision on the timetable of resolving and ending the trade war.
Gary Wagner, always a pleasure speaking with you. Thank you so much for joining us as part of this Outlook series. And we can expect more commentaries from you. You can catch Gary daily on Kitco.com.
Absolutely. I want to wish all of our viewers and yourself a happy holiday season, Christmas, Hanukkah, whatever it is that you follow. And more importantly, a blessed new year that's filled with health and wealth. Yes. And a good life.
Yes, happy investing to all our viewers. Gary, thank you so much. Happy holidays to you as well. And thank you for watching our Outlook series. Be sure to stay tuned. Kitco.com.